Section 1. The total eclipse of the old guard. For a century, the old guard of the aerospace industry ruled the heavens through names like Boeing, Lockheed Martin, and Northrop Grumman. But on June 12, 2026, that industrial hierarchy is officially obliterated as ticker symbol SPCX hits the Nasdaq. SpaceX is entering the market with a rumored $1.75 trillion valuation floor, a figure that represents the formal institutionalization of the world's first multiplanetary corporate sovereign. While SpaceX's $1.75 trillion valuation barely edges out Aramco's debut market cap, the actual size of the transaction is what's melting Wall Street. SpaceX is looking to pull up to $75 billion in cash out of the market, shattering Aramco's cash generation record by nearly 3 times. We are witnessing the birth of an entity that controls the primary substrate for global telecommunications, defense, and machine intelligence. One date, one ticker, and one final frontier. The stars are finally going public. Section 2. The Intelligence Nexus and Project Celestia. The core of this $1.75 trillion valuation isn't just rockets. It's about moving the world's most powerful AI off-planet through a project known as Project Celestia. In early 2026, SpaceX completed a historic all-stock merger with xAI, transforming the company into SpaceX AI, a physical AI powerhouse. Terrestrial data centers are hitting a power wall, with energy consumption projected to rival the entire nation of Japan by 2026. Project Celestia solves this by launching autonomous server blocks wrapped in gold foil to deflect radiation. In orbit, solar arrays are 8 times more productive because there is no atmosphere to block the 24/7 duty cycle. Furthermore, instead of using millions of gallons of water for cooling, these data centers utilize the freezing void of space, which reaches -450 degrees Fahrenheit as an infinite heat sink for radiative cooling. This creates digital soil, a territory where computational power exists beyond the reach of terrestrial regulators. Section 3. Starship and the Logistics of Power. SpaceX's dominance is sustained by its absolute control over the economics of orbital access through the Starship launch system. On May 22, 2026, just weeks before the IPO, the company is scheduled for Flight 12, the maiden launch of Starship version 3. This 124-meter-tall vehicle features the new Raptor 3 engine, which uses a simplified design to achieve higher thrust and lower marginal costs. Starship V3 is a financial necessity, as the IPO's valuation assumes spaceflight will become as routine as commercial aviation. By driving launch costs down to approximately $62 million, nearly half of legacy costs, SpaceX has secured a grip on over 85% of the global payload market. This vertical integration allows them to deploy massive infrastructures, such as the Starlink Gen 3 constellation, at a cadence that no government agency or competitor can hope to match. Section 4. The Liquidity, Tsunami, and Market Rebalancing. The IPO is expected to be a gravitational event that reshapes the liquidity profile of the entire global equity market. SpaceX aims for a $75 billion capital raise, having already implemented a 5-for-1 stock split to drop share prices to a retail-friendly $105.32. The real earthquake occurs 15 days after listing due to the Nasdaq's fast entry rule, which allows massive companies to join the Nasdaq 100 almost immediately. Because index funds operate on a zero-sum pie, they must legally liquidate existing holdings to accommodate SpaceX's massive weighting. This means funds will be forced to shave off fractions of today's market leaders like Apple, Microsoft, and Nvidia to fund their mandatory SPCX allocation. By reserving an unprecedented 30% of the float for retail investors, Musk is targeting patient capital to help maintain the company's 120 times price-to-sales multiple during this high-volatility rebalancing phase. Section 5. The Starshield hegemony and national security. SpaceX has disrupted the traditional military-industrial complex by evolving from a launch vendor into a neo-prime that controls modern warfare infrastructure. Its Starshield division is now deeply integrated with the National Reconnaissance Office and the U.S. Space Force. Starshield operates under a classified $1.8 billion contract to deploy a proliferated low Earth orbit or LEO spy satellite constellation, with at least 183 units already in orbit as of early 2025. This provides a level of persistent monitoring that traditional billion-dollar exquisite satellites cannot match, as they are far more vulnerable to anti-satellite weapons. SpaceX has swept 100% of the Space Force's Lane 1 launch orders to date, rendering the procurement calendars of legacy firms like United Launch Alliance obsolete. For defense investors, this makes SPCX a mandatory holding as it captures the most lucrative data-as-a-service layers of national security. Section 6. The Orbital Cold War and Kessler Risks. The absolute dominance of Starlink, with over 10,000 active satellites, has triggered a secondary space race centered on sovereign counter-constellations. China identifies this dominance as a direct threat and has accelerated its 1,000 Sails project, aiming to produce hundreds of satellites annually in smart factories. Beijing watched in real time as Starlink's mesh network provided an asymmetric advantage in modern conflict, prompting them to cut development cycles by 80%. However, China's rush has introduced systemic environmental risks. Unlike SpaceX, which launches into very low orbits for safe re-entry, Chinese rockets often insert directly into higher orbits, as a 2024 incident saw a Chinese rocket fragment into over 700 trackable pieces of debris. This debris field poses a persistent hazard that could trigger a Kessler syndrome event, potentially rendering entire orbital shells unusable and locking humanity out of the stars for decades. Section 7. Taiwan's Digital Shield and TSMC. Orbital connectivity is a prerequisite for the survival of its democracy. The island currently relies on 15 undersea cables for internet, all of which are sitting ducks for gray zone sabotage or blockades. While Starlink is a viable backup, Taiwan refuses to risk its national security on the idiosyncratic interests or business exposure of any single billionaire who has deep ties to China. To solve this, Taiwan is leveraging its semiconductor manufacturing dominance to build its own democracy-dependent constellation of 120 satellites. By utilizing the TSMC ecosystem to produce specialized RF and radiation-hardened chips, Taipei is constructing a multinational communications backbone with 4 to 6 like-minded countries. This ensures that Taiwan's digital voice cannot be unplugged by an adversary or a private corporate interest, effectively turning their silicon superpower into a shield in the sky. Section 8. Silicon Sovereignty and the Terafab Initiative. To support the immense compute needs of SpaceX AI, Elon Musk announced the Terafab Initiative, a vertically integrated semiconductor fabrication project. This $119 billion partnership with Intel aims to build the largest chip manufacturing facility in the United States, located in Texas. The project is born from the belief that global supply chains cannot meet the specialized needs of space-based data centers and robotics. A cornerstone of Terafab is the D3 chip, a radiation-hardened processor designed to survive cosmic ray interference that would destroy terrestrial chips. SpaceX is fighting supply chain bottlenecks, such as the 557% surge in tungsten prices caused by Chinese export restrictions, by performing 80% of manufacturing in-house. By controlling the entire life cycle of silicon, from design to packaging, SpaceX is securing silicon sovereignty, ensuring its orbital AI clusters remain operational regardless of terrestrial geopolitical shifts. Section 9. The Governance Paradox and the Musk Premium. Despite the technological marvels, the S1 filing reveals a governance structure that has sparked dissent among institutional investors. Through a dual-class share system, Elon Musk will hold 85.1% of the voting power, while owning only 42% of the economic equity, making him essentially unfireable. The bylaws even specify that he cannot be removed as CEO or CTO without his own consent. Furthermore, the company has implemented a mandatory arbitration clause, effectively stripping public shareholders of their right to file class action lawsuits. Musk's compensation is also tied to moonshot goals, such as establishing a Mars colony of 1 million people or deploying 100 terawatts of orbital compute. While critics view these as mechanisms for perpetual dilution, the market continues to price in a Musk Premium, betting that this total founder control is the only way to realize a multiplanetary future. Conclusion: the Geovantage verdict. To invest or not? So, is SpaceX a buy? Here is the Geovantage Markets game plan. 1. The governance warning. You need to know that you are buying Class A shares with 1 vote. Elon Musk holds Class B shares with 10 votes each. He controls 85.1% of the voting power, but only owns 42% of the company. He is unfireable. If he decides to spend your money on a Mars colony that doesn't make a profit for 50 years, you can't stop him. 2. Wait for the dip. Financial advisors are screaming for retail to wait 1 to 2 quarters. Let the 15-day fast entry madness settle. Let the early insiders sell their shares. History shows that 99% of IPOs give you a better entry point 3 to 6 months after the launch. 3. The hidden asset play. If the $1.75 trillion price tag scares you, look at Alphabet. They own about 6% of SpaceX. When SpaceX goes public, Google's balance sheet is going to get a massive multi-billion-dollar boost that might not be fully priced in yet. Final verdict. SpaceX is the most impressive engineering feat of our lifetime, but with a 120 times price-to-sales multiple, it is currently priced for perfection. Don't let FOMO launch your portfolio into a black hole. Stay patient, wait for the initial index inclusion squeeze to settle, and if you do buy, keep your position size disciplined. Thanks for watching Geovantage Markets. Hit that subscribe button for more deep dives, and I'll see you at the next launch.